You want to know why the Fed feels confident enough to tap on the brakes this economy, even though we've got COVID all over the place? Look at Paychex. That's why. They exploded higher today. This is a company that's the second largest payroll processor in America with a big outsourced human capital management business. These guys do best when employment is at the strongest. Right now, Paychex is doing very, very well. Now, this morning, they reported a blowout quarter. It was an 11-cent earnings beat off an 80-cent basis, higher than expected sales, up 13% year-over-year, much better than expected numbers. Even better, management raised their full-year forecast substantially for the second quarter in a row. 6 months ago, they were talking about 10 to 12% earnings growth for 2022 fiscal year. Now they're saying 18 to 20. I mean, that's gigantic. No wonder the stock surged more than 5% today, and I think it could have even gone higher. While Paychex has a habit of reporting strong numbers and then seeing its stock sell off, these results were too good for the market to ignore. But do not take it from me. Let's check in with Marty Mucci, the bankable president and CEO of Paychex, to get a better read on the quarter and what comes next. Mr. Mucci, welcome back to Mad Money.
Thanks, Jim. Thanks. Good to be here.
Yes, Marty. Now, look, you had the highest year-over-year growth in new annualized revenue in over 5 years. You guided things up significantly. What is happening in this country and happening to Paychex that you can do this?
Well, Jim, you're seeing certainly some tailwind as we're seeing macro, improvement. We're continuing to see job growth. We're adding clients. We're adding employees and worksite employees to our clients. So more checks. That's helping revenue, but really great execution on the sales side. We had our best sales quarter in the first half of the year in our history, and we're having still almost near record retention of our clients.
Now, you also had amazing gross margins, and some of this because I think you guys have embraced technology in a way that many white-collar firms have not done. Just talk about some of the things that you've done to make it so that there's money flowing right to the bottom line.
Sure. We've automated an awful lot of the service function, so we're there for clients the way they want to do it. So they can either be through chat, it can be automated chat bots, so they're getting automated answers if they come on the web, and they can self-install many times. So through our Sure Payroll model and even some of the Paychex Flex products, clients are sold, they actually can start to onboard themselves. That not only pleases the client, but it saves us a lot of calls and allows our payroll specialists to have more valued calls where they can do more to help our clients.
I also thought it was interesting in the conference call right at the end, someone was worried about inflation. You actually are bizarrely a net beneficiary of inflation.
Well, yeah, you see one as interest rates rise, that's the expectations now, of course. And that helps us quite a bit on the float. We haven't gotten a lot of that float in the past, but we have about $4 billion in client funds that we hold at any given time, and we earn the float on that. And so as interest rates rise, that'll help us. But also, I think that from an inflationary standpoint, it gives you a little bit more pricing power. It also there is some real growth from our clients, though, that we're taking advantage of. More revenue per client we're getting from them as they buy more services.
Now, speaking of services, I'm trying to understand this, but retirement is at an all-time high, and you actually make money off of retirement.
Yeah, Jim, we hit a new client milestone, over 100,000 clients now, and we're one of the leading providers of 401k plans in the U.S. And there's really two things going on here. One, it's as you know, it's a tough time to attract employees and retain them. They're looking for more benefits for their well-being. One of those is retirement. So more businesses, small and mid-sized businesses, are looking to offer a retirement plan. And second, many states have now offered mandates and required mandates that you must have a retirement plan, almost no matter what size business you are. Some of those are already in place, and some, like California, will have penalties starting in June if you don't have a retirement plan for your employees.
Well, you've also become a trusted advisor in all of the, I'm not about crazy rules. The rules make sense, I'm sure, but pandemic rules, things that were basically that when you call an HR department, they really don't have that expertise, but you've developed it at Paychex.
Well, we have, and a lot of it is automated technology. So all of this on our mobile web, we really help our clients handle a distributed workforce that are working from home or in a hybrid fashion. We have a lot of technology that will help them post jobs. We've talked about our partnership with Indeed before. And, you can post a job digitally, get the postings back. You can even, if you hire someone, bring them on into our payroll system and into the HR system without any paper at all. So a lot of the HR technology. And then if you have issues with vaccinations and how to track them, we've introduced a product that does that. I really feel very proud of the team at Paychex that they've stayed very agile and very much ahead on the innovation of what's coming out. We immediately are offering something that can respond, especially to the COVID needs.
Well, Marty, the stock's been remarkable. You're a conservative steward of capital, always been a great yield, great dividend. And I just want to thank you for everything you've done. I want to congratulate you on getting the chairmanship, too, not just CEO.
Thanks, Jim. Hope you're feeling better.
Okay, absolutely. Thank you, Marty. I am. Thank you very much. That's Marty Mucci, President and CEO of Paychex, Payx. It's going higher. We've been right as rain on this one since 35. Man, Money's back after the break.